Leo's an investor. He knows a lot of stuff, but neither of us work for JWB. This is really all about understanding the life of the investor from their own perspective. And we're going to get a little bit into Leo's story. Then we're going to look at a property of the week. And then we're going to dive further into Leo's story and how you're going about doing some investing. You're in lockdown mode over there. You're competing with the Virgin Galactic flights now, but right now, you know what time it is, man. Right now, it is time that we are live on Facebook for the Thursday edition of the Not Your Average Investor Show, the rental property investor of the week.
Week.
I am your host, Pablo Gonzalez, and with me today is a regular fixture, an asset in the chat, as trademark Good Morning All from California, NASA contractor, real estate investor, computer genius, Leo Furagganan. Man, you know, I can't believe I didn't pronounce. I always see you as Leo. I don't know.
Yeah, Leo F is fine. Because ever since growing up, my last name is always kind of like, even growing up myself. I can't spell it until like maybe second grade, and actually, my full name is longer than this. So, I don't put it there because, so.
Well, Leo, you watch the show. You know I take pride in pronouncing last names. How do you pronounce your last name?
Well, I pronounce it as Furagganan.
Leo yeah. Furagganan. All right,
yeah,
man.
There you go.
That. You deserve that. And listen, everybody joining us, if you are looking to find out about rental property investing, you're in the right place. If you're looking for find out about best in practice property management practices in Jacksonville, Florida, you're in the right place. If you're a real estate professional that is looking for an edge by knowing about the Jacksonville market and looking for extra opportunities for you and your clients, you're in the right place. The next place to go is chatwithjwb.com to hop on a call with the team. And right now it is time for my new favorite tradition, the roll call. You ready, Leo?
Sure.
All right, let's go. Good, John Henning. Good afternoon, all. Lee Bishop is back. Lee, man, I missed you, bro. Good afternoon, Leo and Pablo. Good to have you, Lee. Drew Barnhill is back from Atlanta. Good afternoon, everybody. Sharmali Lal. Sharmali, that's a name I don't recognize. Welcome to the family. She is also from California, Leo. So,
right,
Sharmali, I'd love to know. Where in California you're from. Alejandro Lopez. Good morning to you from California, my friend. I recognize you coming back. Greg Stone with a howdy from New Jersey. Who else we got? We got Marilyn Cotterman from Homosassa, Florida. Leo, you know what you got to say, right?
What's that?
Home of the Manatees.
Manatees. There you go.
Homosassa,
sorry, spaced
Florida. out. I know. Hey, there's a lot of stuff happening in the chat while we're,
all right.
It's a lot of information. Vinay Rogers, we haven't had you in a while, but back from Albuquerque, New Mexico. Good to have you, Vinay. Ashley coming in with the assist, Home of the Manatees. I love it. Oh, San Diego. Sharmali's from San Diego. Love San Diego. Coming to us from Fortune Builders, like many of us do. Good to have you all here. There's a little secret to the chat, right? This is a totally interactive show, but the first time you come, you may not realize that when you're first chatting, it defaults to only speak to panelists. So only Leo and I can see it. And if you change it to panelists and attendees, now you're talking to everybody, right? So you're not only talking to us, everybody else sees your replies. You can get some great advice. Lee Bishop is back in the house. He always gives great advice there in the chat. And last but not least, it's an interactive show. We would love for you to ask questions for me. I would love for you to ask questions about Leo's experience as an investor. Man, I'm a little clumped here. As a client, how he sees about it. Nadeem Shah, he's back. He was just the star of Tuesday, and he's back in the audience today. Nadeem, good to have you back. But anyways, if you want a question asked on the show, pop open the Q&A box, and that opens up, and it pops up right here next to me because the chat just moves really, really fast. I may lose track of your question, or I may go cross-eyed, one of the two. Who knows? But Leo, we were just talking about the fact that, normally this call has Greg Cohen with us, GC, we call him. He's the co-founder of JWB. He's a real expert in real estate. Today's a little bit different, right? Like I've been the host of the show. I've learned a bunch of stuff. Leo's an investor. He knows a lot of stuff, but neither of us work for JWB. This is really all about understanding the life of the investor from their own perspective. And we're going to get a little bit into Leo's story. Then we're going to look at a property of the week. And then we're going to dive further into Leo's story and how you're going about doing some investing. So hang on tight. Leo, you were just telling me a story about when you first started looking at real estate, and it was like a TV commercial, something like that. You want to tell me that story?
Yeah, it was back in the 90s. Like, my cousin and I and a friend of mine formed kind of like a rock band, so to speak. Like, so during that time, like after we jam, we go out, like, hey, let's go to the beach and stuff like that. But also at the same time, uh, no girlfriends that time. We're just among ourselves. So during that time, we come back, come back to this place. He said, like, hey, a couple of beers here. But we always get into this commercial where they show like 1 o'clock, 2 o'clock in the morning. Tom Vu, the man, the mission, or whatever is that. I mean, we still kind of like goof around with him in YouTube right now. At this point, if you search YouTube, he's there. So at that point in time, it's like, we kind of make fun of him, so to speak. But I know deep down, I was thinking like, the real estate is the way to go. But the way he just presented it is like, hey, you come to my seminar, I show you 20 ways how to do it. And you don't be a loser and stuff like that. He's trying to put you down. If you don't come to his seminar, and it was like eye-opening at that point. We kind of like goof around it, but deep down, I know it's real estate. And so fast forward, we started investing actually like maybe when I got into IT. I got like spare, like, I'm getting paid a lot. I mean, like, like, and so we started investing. And at one point we invested in Sacramento. We bought a house, like about it's about $200,000 house back in 2000, and it was a huge house. And at that point in time, we just know one asset, like, the asset appreciation, like, the appreciation of the property. So at that time, we just invested, said like, okay, 200,000. In 5 years, it went up to about 500,000, 550, I think, because I mean, somebody wants to buy it. And so my sister and I and my mom, which is my partners at that point, I decided, like, I told my sister, let's sell it, because I mean, it's time to probably get out. At that point in time, my mom shut us down. So mom always wins. And that's why probably you see me come like from time to time, I'll say like, don't invest with your mom. I mean, like, because she shut us down, and that was kind of like at that point in time, it was downhill. So the only good thing is like we refined.
What year was that, Leo? What year was that when mom shut it down?
About 2005. So 2005, 2000, we bought it. 2005, we tried to sell it.
Yeah.
But I mean, there's a lot of like, it's just right now, just like right this point where put it out in the market, just put it in Craigslist, and then realtor comes to you and, hey, we saw that you had ads, just sell it. I mean, and at that point, there's a lot of offers, but my mom said, no. I mean, at that point, it was more attached, like emotion, because she fully furnished the house. And at that point, I told my sister, this is a liability at this point, because I mean, I can't keep paying the mortgage, because I was the one paying mortgage. I mean, my sister and I, we half it. My mom put the down payment, and then, and we put the mortgage. And for 5 years, we're paying the mortgage, like, nothing is coming in. They're all going out. That time, I think I was in IT, and so all the tech job here are like high paying jobs, so it's fine. And then I got married. At that time, and my wife said like, maybe it's time, like, but mom shut us down. So basically, mom rules. So, and then you know what happened 2008, right? Everything went downhill at that point. So yeah.
So that's interesting. So I'm familiar with mom calling the shots, right? Like I'm a mama's boy myself, proud to say. But so you had a bad experience, right? Like you kind of had you had an idea of what real estate investment could be for you. Sounds like you didn't get out in time before the crash, had a bad experience. How'd you get back into it, right? Because I remember when you first joined these calls, you had a property in Las Vegas already before becoming a JWB client. Right?
Yes,
Is that right?
yes, yes.
Yeah. So
So
how'd you get back into it, and how'd you find this group?
right. I mean, like, and then after that, I mean, it was all downhill. I mean, we short sell the homes, and we moved in, and that's the reason why we moved to Santa Clara, because I mean, a little bit cheaper at that point, and you know, and at that point in time, I decided, like, hey, someday I will still go back. I mean, like, as Kiyosaki said, I mean, you venture out 10 times, maybe you fail 9, you probably succeed in 1. I'll try to see, that one time. So I said, like, I mean, I just have to build up my credit again. And so 2010 up until like around maybe then I started like 5 years. 2005, I started looking at I know it was turnkey. Turnkey property was the way to go, the easiest. And I mean, like, I don't have time to kind of manage a property because I was working 2 jobs too, like supporting my sister's network, and I got another job. So at that point, I was looking at it, but my credit's still not up to par. At that point, I said, like, we still don't have resources, and so fast forward to 2019, and that's the time that I decided, like, I want to go back to Las Vegas, because I mean, I used to have a Las Vegas property also, which was short sale during the downturn. Uh, then we decided, like, I got to go back, because it was also emotion, because the Raiders are going from Oakland to Las Vegas. At that point, I said, I got to follow these guys. I hate the Raiders. No offense, Raiders fans, but I'm the 49ers. So I said, like, well, if they go there, you know how you're going to go, appreciation. But at that point in time, I also think about going for cash flow, the tax saving. But I didn't know the two more assets, like tax, principal pay down, and inflation hedging, as you mentioned.
Yeah.
And so I went back, and then I went back, and I have a realtor there. But I mean, the problem is um, it was all kind of like a little bit of nightmare, because I mean, when I signed in the contract, there was like on the loan processing itself, there was like some issue where we go back and forth. Hey, I need like proof on this. Like, you put in like 40K. Where did you get this? I said, oh, I got it from my wife's company, because I mean, we're partners. Here's the paper trail. Until to the point, like 2 months later, I said, like, you know what? I mean, I don't need it. I mean, like, I was giving up. I said, like, just give me back my money. I mean, you can have, but we work it out. I think I got it from, he said the only way is like maybe borrow money from your 401k. So, which I did. So 2019, it was really a nightmare. But I mean, I got that property, and then the realtor said, you don't need property manager. So he said, like, I'll get you a tenant and you manage yourself. And guess what? 3 months later, the tenant start like having problem not paying.
Yeah.
So, and then thank God, like, long story short, I mean, we got him out before the COVID. So I hired some property manager and got it. And the one good thing, I don't know how I stumbled upon JWB, but I think through Facebook, or maybe when I was Google it, searching like turnkey property. The one thing I like about JWB is because they have everything. So it's kind of like a one-stop shop, where they buy like lands, build it, manage it. Because I got into some other turnkey also. I kind of like spoke to them, like, hey, I'm in Memphis at one point. I was looking at it and I said, like, yeah, you can invest here. I said, how's the property manager? Because I mean, how do you guys manage your property? Because I'm always have bad luck with property management, so to speak. So they said, oh yeah, we know somebody. So at that point, I kind of like, nah. Yeah. And the one thing that I got attracted JWB, because they manage everything.
Yeah.
So, and that's where I started. I spoke to Mike, and he said like, okay, before you start doing this, you gotta start like preparing all this. Cause I mean, I explained to him what my nightmare is in Las Vegas. He said like, okay, now we'll just, this is how you do it. And the rest of it is seamless. Like I was really impressed with, especially how the loan, Highland Mortgage, highly recommended. Um, Hopefully my second property will be going to them. I think according to Cody, they might. So
Yeah,
let's see.
Highland has my first mortgage too. I like their online interface, right? Like it's all kind of like online, and you get to put everything in online. But talking about kind of your buying plan, right? Like I know Greg sent me some information here to talk with you about. And when you got on the phone with Mike, well, first of all, I guess I remember you being part of the group for a long time, right? Like being in the chat, watching the shows. Did you hop on a call with Mike early on, or did you watch a bunch of shows before hopping on a call with Mike?
No, I mean, like I watch first. I mean, like I'm kind of like, I mean, but his wife still, I'm kind of like pessimistic. I mean, I'm trying to change that right now. It's to me, it's like, if it's sometimes too good to be true, it is good to be true. Because I mean, I get burned a lot, and I mean, so I always kind of like, hey, if I get it, if I put like, I'm always like, hey, I put like $1,000 here. Let's see if we lose, like, can we afford to lose $1,000 and things like that. But so I kind of like attend first. I think I've been like attending for like 4 or 5 months, and I
Yeah,
said
you
like,
were around for a while, right? Cool.
yeah.
Yeah. All right. So then you hop on the call with Mike. Tell me about that experience. I know that they go into the why, and you had this why of retirement, financial freedom, and leaving a legacy. You want to kind of talk through that conversation?
Well, it's kind of like basic. I just want to. I mean, you work for IT for what, 25 years. You get sick and tired of it. I mean, like, I mean, it's still an income, but I mean, it's really a stressful job where I mean, at one point, everything is like 24/7. I managed a company one time before NASA. I was an IT manager for a small, I mean, medium-sized construction company. It's a 24/7 job. I mean, like even on vacation, if they have issue, I was in the beach troubleshooting some issue, and then wife getting angry, like, you're on vacation, what are you doing? I mean, you have your laptop on the beach, and you're trying to find like, hey, there's no signal here, and I look like I'm goofy, like in the beach with the laptop, like, so. But at one point in time, I want to get out of the rat race, actually, and that's why we're trying to explore all the avenue for investment, and I mean, leaving legacy also, like, property probably, at the end, we will probably leave it to my kids, my son and my daughter. So, um, and I think that's how it goes. Like, we like to travel. I mean, as you can see, as long as we can still walk, we don't like to like retire like really old, and then we can't travel anymore because, hey, I got arthritis, like sick and stuff like that. So that's kind of like my motivation. I told Mike like, hey, I want to get out of this rat race. I mean, like, yeah.
Cool. Interesting, man. All right. So I wanted to kind of like pick your brain about that journey as like the mindset of the buyer, right? Like the mindset of the investor, and kind of like going through the idea of clearly you wanted real estate from your early rock band days with no girlfriend, and then you took your shot. Didn't work out, but you still had this idea of real estate. Tried it again in Vegas, not a super great experience, but then came back. I would love to right now just pop up. I know we can get into your property at Cherylland Lane, but I want to show the property of the week so that people see
Sure.
kind of like what you see when you're actually selecting a property. So I'm gonna take everybody now. I'm gonna magically whisk us all away here to 11375 Hobart Boulevard, Jacksonville, Florida 32218. I'm gonna ask you in the chat right now. Just let me know if it's clear. I know I gotta zoom in and zoom out. Sometimes you make me sing about it. That's we're not doing that today. But what we're looking at now is the property that we just described. It's got a purchase price of 197,000. Thank you, Alejandro. Thank you for the confirmation, buddy. Purchase price of 197,000. 3-bedroom, 2-bathroom house, 2-car garage, estimated rent range of $12.75. You got this picture here. This is a new construction home. So this is just a typical floor plan that JWB puts up in their new construction inventory. And at the end of the day, this is kind of what is presented to you. Leo, when they showed you this property, did Mike go into the property and the picture first, or was he mostly talking to you about this like conventional financing, total monthly cash flow, and total return on investment?
I think we just went straight to conventional finance, conventional financing. Because I mean, I don't have cash to put down like a full cash payment, right? So conventional financing was the one that we looked at, and I think at that point that's someone that makes sense. And to me, at that point, my criteria is between 7 to 10%, and I think that time it was even higher. I mean, because of interest rate was low, but my criteria is like 7 to 10% return on investment and a cash flow of like maybe $100 and above. I mean, right now my Vegas is like cash flowing at like maybe it was 150 now because of I think it's less than $100, but still cash flowing. So yeah, and appreciation on my Vegas property is about 40. I think it's about 40% from 2 years ago. So those are the key
of appreciation.
Yeah, because right now it was 40 or maybe 20. It's valued to 20, and then it's right now it's 260. So
yeah,
and then I getting calls like email, all this spam, like, hey, I want to buy your property and stuff like that. And so I said, okay. One time I sent like, okay, I mean, can you please like stop? I mean, I'm not selling. No, really, give me a figure. Well, if you can pay me $500,000, it's yours. Like, for a $260,000 property. So at that point he stopped. But those are my criteria when I talked to Mike about it. I think the appreciation, I know, like, I mean, it's just gonna go over the time period of like 10 to 15 years as long as you hold the property. But during the initial process, I mean, I think the return on investment was 7 to 10%, and cash flow was the one that kind of like we discussed with.
I don't want to put you too much on the spot, but can you explain in your own words, and I'll kind of do our usual teaching moment, but can you explain in your own words, like how you consider this cash flow when it comes to the investment versus how you consider the ROI and what's included and all that stuff?
Well, it's not really much yet, but I mean, like, I think the return on investment is like, I think it's something. I know I have it on bigger pockets. You used to describe this one, but I just don't pay attention to it. It's at this point in time it's like blacked out, but I know it's something, the money you put in, like let's say your down payment is like 20, and then minus something. Sorry. I mean,
I got you, buddy. I got you. All right. So teaching moment. This is what we always do on the show. Normally GC is on with us and he does this part of it. I'm going to do my best impersonation of that.
All right.
But this total monthly cash flow, kind of how Leo said, right? It's like $100, over $100. The key to this is the idea that it is cash flow positive, so that you know that you are not dipping into any kind of savings and you're not paying out of pocket for anything like that. And that makes the investment scalable, right? Because if you're trying to get 10, 20 properties, if you got to dip into your own cash flow every month, you're not going to be able to acquire so many properties. So it's like the entry barrier, like it's got to be cash flow positive. And this number at the end of the day represents the typical month, right? So typically your most months that you own this property, you're going to have a tenant in there. You don't have extraneous expenses like maintenance or closing costs or anything like that. So your average experience every single month, it's going to be this, and that's just dollars in, dollars out monthly. And that represents the difference between the cost of your property management, your mortgage, and the rent. right? So that's the usual experience every month, this 118 for this house. And then the total ROI is what Leo was talking about. It is the return that you get based on what you put in. And that now includes 3 of the profit centers. And it also includes one-time costs, right? So when you're buying the property, you put a certain bit of money down. There's also closing costs. That's included in this calculation. When you expect a certain level of maintenance and vacancy throughout the life of the property, that's included in this calculation, right? So also included in this calculation is the profit centers of not just the cash flow piece, but the debt pay down, right? So we had somebody recently on our show, Tim Hicks, he described it as worst case scenario, somebody's paying down this loan for you, right? So the fact that your tenant is paying down the debt, that means that you're accruing equity every single week with those payments. And then you also have tax benefits, right? So there is a certain amount of depreciation you can take that adds to the return of your investment based on certain tax benefits. But if you'll notice, and Leo's talking a lot about appreciation, right? Appreciation is actually not included in this calculation because when JWB presents this as a deal, they are presenting what they can control. And what they can control is within the property boundaries, the cash flow that happens inside the property and the experience of the tenant and how long they can keep a resident in there. So they don't include this appreciation rate. But that being said, the average rate of appreciation in Jacksonville, if you look over a very, very long period, is 4.3%, right? So that's the historical appreciation. Last year, it was like 20. Right now, it's really, really high. So it's a really, really good time to get in as it's going up. But also, if you look at right after the Great Recession and then the recovery after, it averages out to 4.3% as long as you are taking into account a full market cycle. And when JWB sells you this property, they're going to say, hey, listen, you got to at least be looking at this for 5 years. But at the end of the day, you own this property. I've recently bought 2. Leo's bought 1. He's going to buy 1 again soon here. And we own it. We can sell it tomorrow. So they can't control that. So they don't apply this here. But if you invest for a full market cycle, then you should be able to count on home price appreciation. In Jacksonville, home price appreciation on average is 4.3%. And so if you take that into account, if you're taking into account that you're going to hold it 10, 20 years and you include that into it, then this ROI hops up significantly here, right? And this is, it went from 7 to 23%. Leo, can you explain why that is?
Because you added the appreciation of the property.
Yeah. That's right. So you add the appreciation of the property, but when you're financing it, you're only putting 25% down, 20% down. And this is the power of leverage, right? Like when you're getting full ROI of 4.3% on an asset that you only put in a quarter of it, but you're getting the 100% of it, then it multiplies it by 4. That's the leverage that we're talking about, which means an extra 16%, which means that this goes up to 23%. And it becomes a really awesome, from the way that I understand it, it's like a really awesome long-term investment. How'd I do, man? Did that all make sense to you?
Yeah, it sure is. I mean, like, and that's one good thing about like the rental properties. Like, you put in like you own a property for $100,000 for. You put a down payment of 20 or plus the closing cost, $25,000. You own the property for $100,000. In other assets, you don't get it. If you buy gold, you buy gold, like let's say $2,000, you put in $2,000 cash, right? So it's even. But in rental property, you use like tax. I mean, like your leverage itself. So put in like 20%, and you own the property for like 20% of the cost. And that's how I see it. Like, and that's why I think this is my main, the rental property. The property is really real estate. It's the way to go at this point.
Yeah, agreed, man. How did that's really well put in your own words, man. I really appreciate that. How did you understand that concept when you were investing, when you were in a band and you had no girlfriend, or is that something that you've I'm gonna keep tagging you on that?
Yeah, I got long hair back then. I mean, like
Did you understand that concept back then, or is that a concept that you've started understanding now? This concept of leverage.
Nah, this concept, and no, it's just right now. I mean, during that time, it's like uh, our concept was just buy a property, hold it, and then it appreciates. That's it. I mean, like, and that's what my concept of real estate back then. Just hold it, and it'll appreciate. Though it's just like our like land itself. Because I do own a few vacant lots. Because I mean, I also do tax deed and tax lien. So I mean, on those, you on tax deed, you pay cash on the property itself. Like, but I mean, you hold it, and that's fine. But on this property itself, we that's the same mentality back then. It's like hold it, and then let's just appreciate.
Yeah. Yeah. I like it, man. So, a couple of peanut galleries back in the chat over here. Lee Bishop is putting in that back then you used to save money on haircuts. and,
no, actually, no. I mean, like I perm my hair. I mean, I used to have like I pay $100 to perm my hair, go to a salon early in the morning. Like they say, hey, what time you guys open? 9. Hey, can I make an appointment like around 7:30? I don't want people to see me like perming my hair because it was really long and used back in the late 80s, 90s. Those were the glam band and stuff. Like
you were in a glam band, Leo. That's incredible. We please share some of those pictures in the Facebook group. I beg you.
Oh, it was. I mean, it was like I can, but I mean, like, yeah.
I know, man.
Funny.
I'm just messing with you. Really great question by Tony Lowe in the chat. Tony, my apologies, my friend. I know I'm supposed to announce that you got to go to jwbinventory.com and you can download this spreadsheet and you can play along at home. And I totally forgot because I'm like out of rhythm because I'm not with Greg and I got all this other stuff going on. But if you want this sheet to look at this property yourself, and it's a completely interactive sheet, right? You saw that when I put in 4.3%, the number jumped up, right? So like we can go back to 0 and it'll go back down to the original thing. There's also all these different analyses, right? Non-recourse, conventional financing. You can play with the down payment amount. You can play with the interest rate that you get. It's a fully interactive worksheet that you can use to analyze any deal that you're looking at, not just this one. So yeah, I would really, really encourage anybody that's here for the first time, or if you just want to fiddle along here at home alongside us, to go to jwbinventory.com, download this sheet, and you can use it as you wish. It's a powerful Excel sheet that I get to tinker with every single Thursday. So Leo, let's talk about, all right, so that's this property, right? This is 197,000, 7.4% ROI. And in this analysis of conventional financing, it's at an interest rate of 4.13%, right? Like you were just talking about the interest rates being the deal. Your property that you purchased, I'm going to pull up a little screenshot of that real quick. And it was this one, right? So 8554 Cheryland Lane, similar price point, right? 180,000. This other one was 195. But you had this. You got the privilege of this 3.38% interest rate. Tell me about that.
I was really happy about it because I mean, like as an investor, I thought like I'm gonna get like 6% back because my Vegas one is at 5% right now, and so 3.38. I mean that was great. So when they told me like 3.38, I said like I'll take it. I mean, like, but yeah, I was really surprised about it. Yeah, although my score was a little bit better, like so maybe that's the reason why they gave me like a good rate. But I was happy about it, so that's why I told Cody, hey, hopefully we can go back to a Highline Mortgage again because we're working on my second property with JWB. So
Yeah. And listen, you just said something really powerful, right? Like your Vegas property was at like 5.5%, right? Like this is something that we're talking a lot about on the show right now, is that the deal is in the debt. even though interest rates, I just got a property, it was at 4%, right? Even and at this in this sheet, because JWB likes to overpromise, underdeliver, we have it estimated at 4.3%. But because of the fact that interest rates are so low and that situation isn't going to be there forever, right now represents a special time to invest, because Leo, when you got this property, you locked it in at 11.72% because that interest rate was that much lower, and the interest rate is still low, right? Like if only 2 years ago you bought something at five something, and now it's at four, it's still low. So that adds to the multiplier. And is that kind of like what you're thinking right now of the reason why you want to buy another one soon?
Well, yeah, I mean, as much as possible. I mean, if we have the resources, which we're trying right now, my wife and I, actually, yeah, I think the bottom line is like, we try to acquire as many property as we can. I mean, we try to also look to like, we like to go to a multi, like quadplex or type, where I think before on my second property, I talked to somebody in Texas, like about a quad property. The only thing is like, I just met him on Bigger Pockets. So we kind of like collaborated that time. It's kind of like flaky. He said that he called me back, but he didn't. Maybe he bought the property because at that point, you don't know until you met them in person, right? So, and the only thing with, maybe I'm just going off the topic, but with JWB, a lot of my friends and even with my family at that point in time said like, why do you have to invest? Have you seen the property? I said, no. I mean, have you met them? I said, no. I mean, it's just those asset class, like, but I kind of like, and now that I have one property with JWB, and it was like, I was still telling them like, hey, it's a great, I haven't met you guys in person yet, right? I mean, I haven't been to Jacksonville, I mean, someday, hopefully. But as I told them, like, kind of like JWB right now is kind of like a family. I know like Lee, I learned a lot from Lee, Jennifer, Marilyn, I mean, Nadeem, Zach, I mean, all these guys here are like, tremendous assets. Like, I mean, they provide like, I'm still a beginner. I mean, I don't care if I have like 3 or 5, I'm still learning. I mean, 5 property, 10, I'm learning. I mean, that's all. And going to this class right now, I mean, I learn a lot from these guys.
Yeah, that's really cool. That's really cool how you put that, man. That is, when we started this show, that was the vision, right? It was the vision of being able to learn from other people, not just JWB. It was this vision of just like being present all the time and being available and being able to answer questions at scale. And that's really, that was full disclosure, right? Like a year and a half ago when Greg was just like looking for solutions for a marketing plan. That's what I was saying. I'm just like, hey man, like I think, because I had invested with JWB back in like 2014ish, and I didn't really understand it, right? Like I just had like some of my Whitney Ritchie, who's been on the show, and Rich Ritchie, who's been on the show. They just kind of vouched for them, and I put money into it, but I didn't keep it in, and I wish I had. So when I was talking to Greg about it, and I was just starting my marketing company with this idea of producing these shows and having these conversations at scale, that was the plan. It was like, listen, man, if you can show up and explain it over and over again and talk about all the different nuanced things so people really understand it themselves, and then on top of that, create an environment where one of your clients is able to speak to other of your clients without you even being there, and you can create this situation where Lee and Jennifer and Nadeem and Zach and all these people become available to somebody like a Leo, then that's going to facilitate everybody making their best decisions, man. So when you describe it like that, it really just like, it really fills my bucket to think that that's what that's what happened, man. Thanks for sharing that. That's really cool.
Right. I mean, like, I don't know. I mean, like, to me, it's like JWB, even though I've never been there, haven't met anyone here. I think Jennifer is like down here, like about maybe 2 hours drive. One of these days, I'll probably stop by Monterey but it's kind of like this is the company that I'm looking for, because I'm always busy. I mean, I'm doing other things like I'm also doing like crypto investing and other stuff though. I mean, like I do my tax deed, tax lien. So I mean, like once I kind of got a property from you guys, I just kind of like, I mean, it'll just leave it there, and once in a while, my wife and I check on it. But
Yeah.
this is the first company that I saw that you guys do the care about community, vertical integration, and hopefully. And that's what I said before. I mean, you guys don't have anything in Las Vegas, like JWB doesn't have anything in Las Vegas, because I mean, it's a great market out there. But really, I mean, like I trusted you guys. I mean, like as I said, like become a family. You know, still learning, but as I'm kind of like here,
Yeah.
learning from master like Lee and all these guys, like tons of stuff.
That's awesome, man. And I think this Jen just double dog dared me to sing again. We are family. I got my investors in me, and I'm so pumped up that I'm just gonna be like, all right, Leo, looks like we are family.
Yeah, there you go.
I got my investors in me. All right. You're welcome, Jen. Thank you for thank you for daring me. I like this. I think we're gonna turn into a kind of like that James Corbin Zoom karaoke show. for rental property investing. All right, Leo, you said something that I think is really cool. You have other alternative investments, right? Like I think that that's a really interesting thing that's happening right now. People are investing in crypto. They are investing in, you're investing in tax liens. You're doing all these different things. But the way that you described it is interesting to me, because I do think that this crypto thing, and I'm into it, right? I'm actually headed to Vegas on Sunday for a conference, and I can't wait to gamble, right? Because I like messing with money, right? Like I can't wait to play a little bit of cards or whatever. But and because of that, I've also gotten a little bit into crypto, because you get and stocks too, right? Like you get a little bit of that fix of just like you're playing with money and you're seeing what you can do. But it feels a lot better for me when I know that I've taken this, bigger amount of cash that I had, parked it in this long-term asset that's providing me some stability. And then I have this other pool that I get to, that I get to mess around with crypto and stuff like that. Is that
Right.
kind of how you see it too?
Yeah, I mean, like with crypto, I mean, we just got into it like about maybe less than a year. I stumbled upon it, like me, although they told me a long time ago, my friend, like, hey, invest how much? Like $10,000 that time, or 500 or $5,000. I said, yeah, too much. I'd rather invest in something else.
Yeah.
But yeah, I mean, this all about like, I mean, my bread and butter is still going to be the rental property. That's long range. I mean, like my wife knows about it. But yeah, we dab into crypto. I mean, I open an account with Coinbase. Coinbase is, I mean, if you guys are if you open an account with Coinbase, sometimes Coinbase have all this promotion where, hey, you attend this 5-minute thing and they give you like a free digital coin. It's, there's like what, 250 digital coins right there. So, I mean, I own only a few, like Bitcoin, Ethereum, Litecoin, Dogecoin, and Cardano. But I mean, there's a lot more. So if you open an account with Coinbase, they give you like other, like, all you have to do is spend like 5 minutes, like, hey, answer this stuff, like, attend this. And so far I got like $50 worth of other digital coins, which probably worth something in 10 years or probably worth less, but that's the way I see it. I mean, like, we also did some data mining right now where we sign up for a service where we bought a couple of machines that does the data mining. So weekly we have something, and we factored in like, hey, I mean, Bitcoin right here is really volatile. If we lose this money, is that gonna kill us? I mean, that's kind of like outside of like real estate. That's how we thought about it. Like we think like, if we lose this, I mean, are we dead or not? Because if we are, then don't invest in that one. Because I mean, I also have like Disney stock, which I was planning to sell. But my wife said, no, I mean, those are dividend stocks. So you get dividends every, I said, nah, I got a few anyway. So, and then I got into like gold and silver type, where kind of like every quarter I kind of like visit, like, bought a little bit of silver here, copper, palladium, and gold. So we just kind of like diversifying. But the main, I think my main key is still real estate.
Yeah, that's
Period.
interesting. And that you're describing kind of like exactly how I think too, right? Like be diversified, have invest in things that are really, really safe for the long-term things that you can just kind of like understand. Like I have two buckets of, if I lose this money, I'm in trouble, right? Like, and then there's the other bucket of just like, all right, this is my upside money. And I have put a little bit of that into crypto. I put some of that into the stock market. And that's really, really interesting. It's kind of like that black swan kind of like investing type. That's cool, man. That's really interesting. So,
Okay.
So then going forward, you have this plan for, well, tell me about, I guess we haven't really talked about owning the home with JWB right now, right? Like, how's that been? Like you said, you just kind of like check in with it monthly? Are you paying any attention to it versus the Vegas one? Like, give me like the differences of like passive investing versus active investing.
Well, with JWB, I still like check on it, like, not maybe thoroughly, because I trusted you guys. I mean, like, everything that was described in the show, it is happening. So, and then appreciation is there too. Someday, it will appreciate. I mean, like, whether you like it or not, it will. So, yeah, I mean, as far as like checking on it, like maybe on a weekly basis, I kind of like dab into the spreadsheet, like play around with it and see how it goes. But because of all my other assets, like especially the tax lien, tax deed, I kind of like follow them. Like, okay, now it's in Florida. I think Florida's done. I mean, I got a few tax lien certificates there. So it's kind of like, following them, like, okay, now is Texas like doing tax deed. But so I kind of like left it there. But I know the Vegas one, I kind of like follow it continuously, because I mean, like, I don't have any kind of record. I think I'm gonna incorporate my Vegas property in your spreadsheet. I think I can use that. So, but that's it. I mean, like, so far, I mean, like, this is the first company that I kind of like, my sister was saying, like, you're the pessimistic guy and you trusted this company. I said, like, yeah, I mean, like, I don't know. I mean, like, I guess I'm always the one that looking for, hey, is this like a scam? I Google it, search it, a scam, or, but somehow with JWB, I just kind of left it, like, say, like, I mean, it goes with the flow, so to speak. So
that's cool, man. That's cool. Lee's asking, who's your portfolio manager? Is it Cody? You said?
Cody.
Yeah, he's my portfolio manager too. Yeah, he's great, man. He reaches out often. Like I love talking to the guy. He's awesome. You know, I don't know much about tax lien investing, Leo. Can you tell me a little bit about that? What kind of returns do you get for that? Like when you say that Florida's done, but Texas is still going, what does all that mean?
Well, I mean, like, tax lien is like, you go like counties, like every year, like counties in different state does tax lien or tax deed. California is a tax deed state, meaning if you owe money for 5 years, they foreclose your property and sell it. And so doing that here is kind of like a little bit expensive. I don't know if you have like maybe at least $50,000 cash, and then they're bidding frenzy. With tax lien certificate, it's like, in Florida, it's like, well, I'll make example like Arizona, because Arizona, I got like a few. Hopefully, there's one that they might probably foreclose, and I might probably luckily get the property. Yeah, I'm still working out with, like, I don't want to throw that guy. I mean, like, work out with a guy who there. But on a tax lien, if an owner like doesn't pay tax, let's say $1,000 tax on their property for 1 year, the county sell it. So they have this auction like every year. They sell it to investor or bidder. I mean, right now you can do it online. So after 1 year, let's say the percent is like Arizona is 16%, right? But I mean, but because of the bidding frenzy, sometimes your return will be like zero. If you win you start bidding it down 16, 15, 14, 13, until you bid it down to whoever bids the lowest on tax lien, the county gave it to you. And then after 3 years, let's say for argument's sake, this guy didn't pay, and you kind of pay the taxes for two like first year, second year, third year. The third year, I think you can foreclose in Arizona. In Florida, it's different. In Florida, it's like you can foreclose in 2 years. So let's say you bought this tax lien 18% in Florida. You bought the tax lien for this property. Let's say you got it, no bidding, 18%. The second year, I think, I don't know. I mean, you don't bid. On the third year, I think you can file for foreclosure. So to speak, it's like you have to contact the county and said, hey, I got this tax lien certificate here. What's going on? And they will try to sell that to a tax deed now at that point. And then if nobody buys the property in Florida, then you get it. If somebody buy it, then you get your 16%. But it's not that simple at all. I mean, it's not really like, I'm still learning. I mean, like, I got a few vacant lots in Arizona and Nevada. And I got a few certificates in Arizona and Florida, but still a learning process. But nothing still, that's why I'm going back. I still like the rental.
Yeah.
Because I mean, like, I found you guys, I mean, like, hey, if we do this, we talk about this, I just go with the flow. If there's some instances where, problem arises, then that's the time like, hey, Cody, what's going on with this? Like yesterday I said like, hey, Cody, I mean, like, why is it that my insurance asking me, the loan said like my insurance would be expiring. I only got it March. So they took care of it. And that's one thing, in tax lien, tax deed, you have to take care of it. You have to contact counties. And sometimes you're kind of like in different, like, in California, it's different term. You talk to them about Florida, they get angry. I mean, some of those government employee, like they get angry, like, what are you talking about? Like, I mean, okay, I just need like parcel ID. Is the land buildable? Yeah. All this kind of stuff. So.
Sounds interesting, man. Sounds. Thanks for explaining that. Like, it's an interesting thing. Lee's saying that tax lien investment can be lucrative. It sounds like it can be lucrative. It also sounds like opting to be on hold or be at the DMV. Like, it's like dealing with like a government office to get answers coming from the construction world from back in the day. That sounds like that's why you make your money, because nobody actually wants to do it, right?
No. I mean, like, even email, they don't answer back. You got to follow up email. Then I call. Yeah. Oh, the guy is not here anymore. Oh, okay. All right.
Leo, this was awesome, man. We time has flown. It's been an hour. You were worried that we wouldn't be able to like teach anything, man. You did phenomenally well. Like, I thought this was cool.
Well, as usual, I learn again. I learn a lot. I mean, like, every time I attend, I learn something, piece by piece, like, little by little, but still a learning process. And hopefully I see you guys someday. Like, I mean, like, travel, like, I think there's still a little bit of travel restriction. I'm not sure. I mean, I know there's a lot of hooplas traveling, so I'd rather drive.
It'll happen, man. I know that Jen's working hard at peer pressuring Greg into having a meetup here and having one in Monterey, California. So I'm pretty sure that that's coming down the pipe, man. But I just want to say thank you for doing this. I want to thank all of you that were with us today, hanging out with us. Like, it never doesn't dawn on me the fact that you take an hour out of your day in the middle of a Thursday to hang out, listen to me and Leo talking, listen to me and GC talking. I really, really appreciate you being here. Your questions and your comments make it. Jen, thanks for making me sing. I really like that. Next week, we are talking to Jason DeBono, who was on last year with us. Jason is the president of New View Capital. And what they do is they do self-directed IRAs, right? So this is next week will be all about how you can actually buy rental properties inside of your retirement portfolio. So
Cool.
that's a pretty interesting topic that I know really opened up my eyes early last year when we did it. And we're going to do a deep dive into that. And again, if you're looking to get into rental properties, you were in the right place today, right? If you wanted to hear about property management, how to be passive like Leo, you're in the right place. If you're a real estate investor looking for an edge here, a real estate professional in the Jacksonville market, you're in the right place. If you like what you hear, you want to get a little bit more context, you want to learn a little bit more how it goes to you and how you can start investing or you can take your next step. If you go to chatwithjwb.com, you get to pick out the time to hop on a call with Courtney. It's not salesy. They just kind of talk you through like everything that you need to know and figure out if you're a good fit, just the same. But Leo, buddy, I just want to say again, you killed it, man. Leo Furagganan.
There you go.
Yeah.
Let's rock.
Let's
Thanks
rock,
all.
man. I can't wait to see pictures of you in that glam bag. What
I'll
what
find
instrument
one.
did you play?
It's mostly rock and heavy metal. I mean,
What was
like
your instrument? What were you, the drummer, the guitarist?
drums.
The drums. Very cool.
But I mean, not good anymore. I mean, like my son
Oh.
plays better than I do now. So
That's cool. That's cool, man. Any last words, Leo? Say goodbye to everybody.
well, thank you all. I mean, like I mean, it's my first time here,
Yeah.
and I was telling Pablo like, it is scary.
Yeah.
I don't want to see my face. Like I'm really kind of like goofy in this kind of like So, but thank you all. I mean, and again, very educational and still learning process for me. But thank you all. Thanks all.
Thanks, Leo. Hey, man, you were scared, but you did it, buddy. You showed up. You're a hero. See you later, man. Take
Thanks.
care. Bye.